Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Welcome back as we bring you yet another episode of Pasture to Pin. Last time we mixed up our bi-weekly format to combine forces with the rock stars over on the grain feed. Thank you again to Jim and Jake for having us on last week. This week we are back to our cattle team format as we look to bring you the most up-to-date news and happenings in the cattle markets to help cattle producers manage risk. As usual, I am your host, MT Rowen, and we are recording from my home office. Today, I am once again joined by my co-host and teammate, Mr. Trey Freeman. Trey, welcome to the show.
Good to be here again, MT.
Trey and I have an exciting lineup for you today as we see some seasonal dynamics coming into play. But before we start, let me timestamp the episode. Today is Tuesday, March 5th, 2024 at 3:09 in the afternoon. Trey, kick us off with the futures update, please.
You bet. Starting with feeders, after rallying over $45 from the December low, feeders have run into resistance a little short of that record high in September. That's okay, not surprising. We had some traders take some profits as we approach those record highs from fall. Also, this is not out of line with the seasonal as April and May tend to decline from mid-February to mid-March before finding a seasonal bottom and advancing into April. In addition, corn has posted a modest rally after falling nearly $1 a bushel over the last 2.5 months, taking some wind out of the sales and feeders. Overall, nothing to fret about as of now. A healthy market needs pullbacks and the market was due. April is backed off to around 256, finding support around that 20-day moving average. This will be minor support with modest support coming in at last week's low at 251.97 and major support around 247.15. Resistance above stands at 260. A close above this opens the door to the gap lower hanging on the chart from October at 265.37 to 265.25. Looking at the futures curve for feeders, April and May made significant gains on the late summer and fall contracts as operators were swift to secure inventory for summer pasture amid the well-known tight supplies. Those deferred contracts seem content around that 270 area recently, not all out of line seasonally, tending to have a choppy sideways trade until the May contract goes off the board before rallying into July. Now, live cattle funds have added 45,000 contracts to their net long position since mid-January. A nice tailwind pushing spot futures to new record highs. Seasonally, April tends to move lower into the end of March before a mostly sideways trade into expiration. April has run into strong resistance at the bottom of the gap lower left hanging on the chart from late October at 189. That gap extends up to 190.27. Charts like to fill gaps, and that's a big one, so it'll be interesting to see if it can close it prior to expiration. Modest support sits below at last week's low of 184.47 and major support at the double bottom of 182.82 from mid-February. To wrap it up, this recent pullback in both markets, it's mostly in line with seasonals. Had some volatility enter the market last week, but buyers stepped in at lower prices and charts remain intact.
Very good. Thank you very much for that update, Trey. We have had some winter weather sweep across the plains that affected the flow of cattle into feed yards and also into the packing plant. By and large, that winter weather looks to be behind us as things have definitely turned dry and windy. The forecast looks somewhat promising over the next couple of weeks, but dry conditions may persist as we get into the month of April. On the cash cattle side, the cash market has stagnated over the past week. CME Feeder Cattle Index 7-day average was down 28 cents week over week compared to this past Friday. Live cash cattle is also trading sideways as prices last week were up $1 at most, with most trades happening at the 183 to 184 mark between the north and the south. On the cutout side, cutout prices have pushed over $300 since our last episode. Week over week, this is an increase of $3.05 as today's PM release had choice at 304.79. Trey, let me pull you back in here. We can have a quasi coffee shop talk. What are the risk management strategies that you have been talking about, and or what are some risk management strategies that you might recommend as we seem to have entered a sideways market here?
In feeders, looking out to the late summer, early fall, the August through November is trading around 270. I like protecting that 260, spending around $5.50 to $7 a hundredweight, kind of depending how far you go out. That 260 is about the spot contract high we had in the fall, and already trading 270 out there with a lot of these tight supplies seeming to be built in. I think that's a great level of protection. That's a business decision. And in fat cattle, with October trading 186 and December trading 189, I like protecting that 180 to 184 level, spending about $4 or $5 a hundredweight. Things look great out there in the deferreds. Really, a lot of these tight supplies seem to have been built into the market for now, so plenty of opportunity out there. I am fairly aggressive on getting protection and spending some money here. Again, just as in feeders, 270 out there, spot contract high 260. You can protect that 260 here right now.
Very good, Trey. Thank you for that. And yes, I would 100% agree. There's some exciting pricing options out there. I've been having a lot of conversations about buying puts, maybe even introducing some put spreads. I've actually had some backgrounder types have conversations about managing the buy side with buying calls. So lots of opportunity out there, especially in the feeder cattle space. That is a wrap for this episode of Pasture to Pen. Before we go, we would like to offer our prayers, thoughts, and condolences to those in the Eastern Texas Panhandle, the Eastern Oklahoma Panhandle, and Western Oklahoma as the wildfires continue to burn. We're praying that the fires are put out soon, and we offer you our support. Thank you to all of our viewers for watching this episode. If you have not done it yet, hit the like button, hit the subscribe button, and click the bell to be notified of future episodes. Thank you to Paige, who keeps us on the straight and narrow, and thank you to the entire Everag Insights team for making this show a reality. Until next time, stay safe and pray for rain.